Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Carl Sussman. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour with me, your host, Carl Sussman. Thank you so much for being here today. We are back and we have a ton of news today to talk about. We are going to spend today's hour talking about new bills and legislation and regulations that are going to be going into effect or have just gone into effect. All of these things impacting your insurance premium and your coverage. Remember, today's show is brought to you by ICGS, the Insurance Consumer Guidance Society. Their sole purpose is to help you understand and properly utilize your insurance policy. More information and become a member over at icgs.org. All right, are you ready? Let's do it. Starting out, we are going to look at 2025's legislative session and what it brought. We had, are you ready for this? 917 bills that hit the governor's desk. 794 of them were signed. 123 of those were vetoed. So about 800 new laws coming to California from just this session. That is a lot. Also, remember, most are non-urgency laws, meaning that they're going to take effect on January 1st, 2026. But we'll go over each one as we go through. Some of them do have that urgency clause, which basically puts them into effect immediately. Let's jump right in. The first thing we see, this is near and dear to my heart, are the bill that is AB 943, which is the Agents and Brokers legislation law. Now, this is the strangest thing in the world because what it does is it eliminates the 20-hour let me try that again. It eliminates the 20-hour pre-licensing requirement in order to get your property and casualty lines insurance license. I mean, it's sort of mic drop. Why would they do that? I can't fathom why somebody would decide to pass a bill or even propose a bill to dumb down insurance brokers getting their license. I mean, it's 20 hours. It's nothing. It's not as if you go through these licensing courses and all of a sudden you become an expert. Believe me, that's not how it works. But who does this help? That's what I would like to know. I would love to know if you know anyone that supported this AB 943. Please have them reach out to me because I would really very much like to know what the purpose of this was. Who was this going to help by eliminating pre-licensing courses, by taking away mandatory training for someone to get a license? Blows my mind. Of course, they still leave the 12-hour ethics course that needs to be taken. So, yes, you'll be an ignorant broker, but at least you'll be an ethical ignorant broker. It's just ridiculous. Basically, what it's doing is it's changing people having to go about learning about insurance before they can get licensed to making it easier to get licensed and then have more on-the-job training. What could go wrong? You can tell, not a fan. Well, let's move on to the next section. Property insurance. Property insurance. We're talking about homeowners insurance. We're talking about renters insurance. We're talking about condominium owners insurance, any type of physical property. The bill that was passed is AB 1. Now, what is AB 1? It is for the Safer from Wildfires update. Okay. Now, this is not a one and done. Basically, AB 1 forces the California Department of Insurance to revisit the Safer from Wildfire home hardening discounts by January 1st, 2030, and then every 5 years after that. So basically what they're doing is they're saying, okay, we have these regulations, we have these laws on the books that fall under the umbrella of the Safer from Wildfire guidelines. But just because we have them, they change, right? The situations change, home construction changes, science changes, data changes. So all this is doing is effectively telling the California Department of Insurance, hey, we want you to look over these guidelines and review them every 5 years. Again, this is good. I don't see any downside to this Although I'm never quite sure why we have to legislate and regulate something that should just be happening anyway. I would suspect that an insurance commissioner is already going to be doing that, but that's just me. The California Department of Insurance has to also connect with Cal Fire and a bunch of other public entities each time they go through and review the mitigation standards and be sure that they're not just being decided in a vacuum. For example, you need to replace your roof, clear 5 feet around your home, upgrade the vents. You want to keep those things allowing discounts to be available for homeowners that do those things, right? Again, lots of common sense to this, but for whatever reason, somebody felt it necessary to put it in writing, spend the money to make it all happen. So there you have it. Next up, we have AB 493. Now, this one has the urgency clause, meaning that it goes into effect, I think it's already in effect. If it went into effect upon being passed. And what this basically did is it said that when your house is damaged and an insurance company is basically waiting to make that payment, the insurance carrier can't just hold on to that money and earn interest on it until they decide to make the payment for whatever it is, whatever the reason is that it is taking on this time between the time the claim is due to be paid and is actually paid. A minimum of 2% simple interest has to be added on to that money. So basically, they're calling it the no free interest loan to lenders. So they have to be able to pay some form of interest if they're holding on to these large sums of money. So say your home suffers a big loss. The insurance company sends $150,000 to your mortgager and to your bank. And while repairs are being done, the bank's just holding on to the money. Before this bill, the bank would just hold on to that money and make money. Now the lender has to pay you at least 2% interest on that money that's being held. Okay, I don't see any particular problem with this. This is definitely going to put some money in consumer pockets. Do the banks like it? Probably not, because this was just an area they could make money on float. Remember, when you've got lots and lots of money sitting around, you can make money on that money. And this was one area that I am sure banks were happily making money on that. Now, it's time to take a quick break. When we come back, we're going to go through some more legislation that was passed, and we're going to hear about how that is going to impact you. So don't go away. Stay right there. I am Carl Sussman. This is Insurance Hour. We will be back in 60 seconds. Stand by.
Insurance Consumer Guidance Society, ICGS. Independent, accessible, empowering. Educating Californians for smarter insurance choices. The Insurance Consumer Guidance Society, ICGS, is a 501c3 nonprofit organization dedicated to providing the residents of California with clear, unbiased educational resources about insurance. Our mission is to enhance consumer understanding of insurance products and the evolving regulatory environment, particularly in light of challenges posed by climate change and market shifts. ICGS provides comprehensive insurance education, public and media outreach, and direct consumer support. ICGS serves the public by fostering informed decision-making in a dynamic insurance landscape and empowers Californians with the knowledge they need to confidently navigate their insurance choices. To learn more about how we can serve you and find free resources, visit us online at icgs.org.
Hello. This is Insurance Hour with me, your host, Carl Sussman. Thank you so much for being here today. Remember, our show is sponsored by the generous support of ICGS. That is the Insurance Consumer Guidance Society. That is a nonprofit organization whose sole purpose is to help you understand your insurance policies, how to purchase them, what to do with them, all of that good stuff. It's like having a friend in the industry. So please support our sponsor, ICGS, the Insurance Consumer Guidance Society. More information can be found at icgs.org. All right, we're back. We are going to talk about additional bills and laws and regulations and all the things we love that impact our beloved insurance world. Next one on the radar is AB 888. Ever wonder how they come up with these numbers? You would think that they just sort of happen in order of being introduced. I would love to know if that's the case, because you just feel like a number that's 888 is going to have an easier time getting through than 1326 or something like that. Anyway, I digress. All right, AB 888. This is the Safe Home Grant Program. Grant money. So what this does is it creates a California Department of Insurance run grant program to help pay for fire-safe roofs. Roof? Is it roofs or roofs? That's like I'm barking. Roof. That critical 0 to 5 foot non-combustible zone and other community wildfire resilient work. Okay, so we are going to be seeing the Department of Insurance come up with a program to be able to get money to consumers to help them do things to make their homes more fire resistive. Okay, so the idea is to reduce losses and help people qualify for mitigation discounts. Now, a lot of these things are expensive, right? A new roof is expensive. So people can't afford 20, 40 grand just to pay for a roof. So let's give an example. So if you've got a couple in a high fire risk area, they want to replace their old wood shake roof, but they can't afford it. So they potentially would be able to go to this Safe Homes grant to get a Class A roof and clean the area around their home to the 0 to 5 foot zone, so they're safer and less likely to have their home burn. So not only will they potentially have money, but now they're going to be able to potentially pay less for their insurance policy. Now, I think this is the beginning of a larger trend, because let's recap something about this. When we realize that insurance companies and consumers are really on the same page when it comes to one thing, and that's called losses. A consumer doesn't want to have their house burned down, and guess what? The insurance company does not want to have their house burned down either. They are aligned. So what this is doing is it's going to help push the needle in the direction of being more prepared, of being in a situation where we can do things to prevent loss, because that's really what we want. We want to prevent loss. Loss is bad. Everyone sometimes needs to be reminded. I never forget, I was at a conference and I had a conversation with a group of people, and we were talking, and I said, if you ask 100 people, what would you rather have? A covered loss with a $0 deductible, or not have a loss at all? And would you believe that the majority of people would prefer to have a covered loss than just not have a loss? And the justification is, well, I've been paying for my insurance premium. This way I have the ability to get some of that money back. But that's not what insurance is about. And that general mentality of not understanding that loss is bad. Look at the word. Loss means something has happened that you have lost. I know you can't define something by using the word, but loss means less. Loss means something is gone. Loss means suffering. You don't have a loss without being out something. Now, just because you may have a good insurance policy to help you in the process of getting back to where you were pre-loss, or at least help with that process, it's still a loss. So this particular program is going to be something that's going to try and help incentivize people to do things to prevent losses, give them money to prevent losses, and allow them to get discounts on their property insurance. Once again, that will prevent losses. So we're all in line with the same thing. Now, of course, who's going to pay for this? Grants are money, but where does that money come from? Well, that's a conversation for another time. So again, AB 888, the idea is let's help be better prepared to prevent, I have to say it one more time, losses, okay? Next up, AB 1339. This is the Affordable Housing Insurance Available Study. That's a mouthful. So officially, they acknowledge that there is an insurance availability crisis. So what this bill does is it directs the California Department of Insurance to study the availability of property, liability, and builder's risk insurance policies for homeowners. That's basically Sacramento saying, we know there's a problem. People can't get coverage, which, again, it makes me just exhale because I'm trying to understand why we need to legislate telling another government body to study something. Seriously, is there anybody that's listening to this that doesn't believe that the California Department of Insurance is well aware that there is a problem getting property insurance? There's a problem getting homeowners insurance. We need to spend money to create a bill that's going to force the Department of Insurance to form a study about the availability. We know there's poor availability. Everybody knows that. You have to be living under a rock to not realize that there's a problem with housing insurance availability. So now someone has spent time and money creating this bill. Now this bill has passed. And now that means the Department of Insurance is going to have to spend money studying what we all know that they also already know is an issue. I am all for transparency. I am all for people understanding what's going on. And I assume the end game for this was for the Department of Insurance to then publish something that talks about its finding about property insurance availability or lack thereof. But how much money, if you take the money to get this bill, pass this bill, send it to the Department of Insurance. Now the Department of Insurance has to spend money doing a study to come up with information, publish that. Such a waste of money when we already know all of this. All of this information is known by everyone. All right? On that note, I think I need to take another break because these things get me frustrated sometimes. So stand by, 60 seconds, Insurance Hour with me, Carl Sussman. We'll be back right after this quick message.
Insurance Consumer Guidance Society. Our mission is to enhance consumer understanding of insurance products and the regulatory landscape in which they operate, particularly in light of mounting challenges that many consumers have faced, such as natural disasters and significant market shifts. These factors have contributed to an increasingly volatile insurance marketplace across California. ICGS is there to help. Please visit our website, icgs.org, and help support the nonprofit that's there to support you. Through education, engagement, and direct support, the Insurance Consumer Guidance Society strives to be a steadfast ally and resource for California consumers today and in the future. Visit our website now to support us at icgs.org. Once again, our website is icgs.org. Insurance Consumer Guidance Society, educating Californians for smarter insurance choices.
Hello. This is Insurance Hour with me, your host, Carl Sussman. Thank you so much for being here today. Remember, this show is brought to you by the generous support of ICGS, the Insurance Consumer Guidance Society. Their sole purpose, the only reason they exist, is to get money and help insureds understand their insurance policy. That is the mission. That is the goal. So please visit icgs.org. Help them help you. Yeah, show me the money, right? Help me help you. We've all heard that one before. All right, listen, we're talking about new laws that are going into effect or have gone into effect based on the most recent California legislative session. It's a tongue twister. We recently just talked about AB 1339, which was forcing the Department of Insurance to create a study on availability. If you missed that, go back and listen to it. I was just talking about it before the break, and I got a little bit hot under the collar. Well, unfortunately, we're not done yet because now we are at SB 254, which is the Wildfire Fund Administration Coverage Solutions Report. You see where this is going? Well, what is this? Well, this is a Wildfire Fund tune-up. It adjusts administration of the State Wildfire Fund, which is the fund tied to utility wildfire liabilities, and it connects it more directly to homeowners insurance issues. So what does this mean? Well, it means a big report coming in 2026. Now, the Department of Insurance has to deliver recommendations on wildfire coverage solutions by April 1st, no joke, 2026. That's going to be the next big, what do we do about this market? Huh? What? What are you talking about? So now we have a bill that's telling the Department of Insurance they have to give us a report on wildfire coverage solutions. What do we do with this hard market? What do we do with the fact that we're having $100 billion events that's impacting availability and affordability of property insurance? Seriously? We are going to pay, we're paying for this. We are paying people to go to Sacramento to pass this bill, SB 254, which sole purpose is to turn around and tell the Department of Insurance, who again, we pay, to give recommendations on wildfire coverage solutions? Really? Really? What is it with these people? All they seem to be able to do is sit around and come up with, let's tell these people to fix the problem. Let's tell these people to figure out what the solution is to this problem. Let's spend more money on committees. Let's spend more money on reports. How about we have a bill that says, you know what? Let's use some science. Let's find some actual data that supports what it is that we have seen that is creating these fires, what it is that we can do to prevent them, and as importantly, if not more, what can homeowners do to protect their homes against wildfire? Who do you think is going to be able to find that information? Do you think it's going to be an average think tank? Do you think it's going to be a politician? Do you think it's going to be the California Department of Insurance? Do you think it's going to be an insurance company that is seeing these claims and paying these claims? Well, I don't know about you, but my money's on the insurance company in this case. They are seeing these losses. They are seeing everything from beginning to end. They're seeing what it costs. They're seeing the homes that burn all the way. They're seeing the homes that have partial losses. They're seeing all of it. But nobody lets the insurance carriers use this information and actually do anything. When they try and turn around and say, okay, our studies show that if homeowners do X, Y, and Z, they'll be less likely to suffer from a loss for fire. We're going to give them a discount. No. That all of a sudden has to be, the brakes have to be put on that. We have to turn around and say, okay, let's legislate that as well, because we want to know, is 7% enough of a discount? Is 20% enough of a discount? Let the industry do what it does, for crying out loud. Stop passing these obnoxious bills that do nothing other than spend money to create reports. What is a report going to do? Nothing. It's going to just be out there again. If I didn't mention this bill and tell you that by April 1st, the Department of Insurance has to provide recommendations for wildfire solutions, would you know about it? Do you think anybody would know about it? Do you even think the report's going to actually happen? Or is it going to be a footnote in some news article that says, oh, by the way, there was a report due on wildfire and they didn't get it out on time. They gave them another 6 months or 12 months. I mean, it blows my mind how much wasted time there is by our elected officials. I hate to say it because, we have to deal with this, that just spend time pointing the finger and creating committees and coming up with every excuse other than just, why do we look at the real world? Why do we work with the industries that are dealing with these worlds and figure out how to make this work better? It's unbelievable to me. Unbelievable. I got to move on. All right. The next one we're going to talk about is SB 429. This is the Public Wildfire Catastrophe Model. Now, this is interesting. This funds university grants to create a public catastrophic model for the California Department of Insurance. Okay, let me get this straight. So the entire country has been working with catastrophe modeling basically since they existed. And even in California, it was being used for certain types of insurance. But for some reason, California was not allowed to utilize catastrophe modeling when it came to property insurance, home insurance. They weren't allowed to use them. Finally, the Department of Insurance changed those guidelines through the sustainable insurance strategy and allows insurance companies with certain caveats to be able to utilize them. Great. So maybe now we'll actually have something that makes a little more sense. We'll be able to reward people for doing things that make their homes less likely to burn. We'll be able to reward people by lowering premiums in areas that are less likely to burn based on these models, all this stuff. But wait, we can't just let that happen. We have to spend more money and create a publicly funded model to look at. Why do we need to do this exactly? Why? I just don't understand why all of this money that's being spent, again, creating this bill, getting this bill passed, and now we're going to be spending money creating a public catastrophe model, which is great. The more models, the better. But why do we have to legislate this? What is that going to tell us? If the public model shows one thing and 10 other or 20 other insurance companies show something different, which will you believe to be true? We have to talk about this a little bit more after the break. I will be right back. Insurance Hour with me, Carl Sussman.
What if your insurance failed you tomorrow? A wildfire, a burst pipe, a car accident. Most people think they're covered until they find out they're not. And that's exactly why the Insurance Consumer Guidance Society, ICGS, exists. We are an independent, nonprofit organization helping Californians understand their insurance before disaster strikes. No sales pitch, no corporate agenda, just clear, unbiased guidance from licensed experts who work for you, not the insurance companies. Whether you're a homeowner, renter, or a business owner, ICGS helps you navigate premiums, exclusions, deductibles, even California's complex wildfire and hazard requirements. Because the biggest risk isn't the disaster itself. It's not knowing what your policy actually covers. Visit icgs.org to get free education and support. And because ICGS is a nonprofit, your donation helps keep this vital service free for Californians who need it most. ICGS, empowering Californians to make informed insurance decisions.
Hello. This is Insurance Hour with me, your host, Carl Sussman. Thank you so much for being here today and learning about your favorite topic and mine, insurance. Remember, this show would not be possible if it wasn't for the generous support of ICGS, that is the Insurance Consumer Guidance Society. That is a nonprofit whose sole purpose, it's in its soul, is to help educate people on insurance. How to use it, how to get it, how it works, everything. It's like having a friend in the industry. Please visit icgs.org, support them. We need their support to keep this show going. Speaking about keeping things going, before the break, we were talking about SB 429. I got to talk a little bit more about it. I'm sorry, I got to do it. So SB 429 is the public wildfire catastrophe model. So we're going to take public money and we're going to create a catastrophe model. We're basically going to take public money and create something that will help us predict wildfires. Every insurance company is doing this. Other large think tanks are doing this. Everybody's doing this. So why should the state not turn around and spend some money doing it as well? So let's just peel back the onion a little bit on this. Why is this important? It's important that we have a means to compare, right? Again, like I said before the break, if we have 10 insurance companies and they're all saying this is a bad area based on our modeling, but this other model that we're paying for as taxpayers comes back and says, no, we think that's a great area, not going to burn at all. What is that going to do for us? You can't force an insurance company whose data shows something is a high risk. You can't show them something else that says, nope, we disagree, so make it inexpensive. Pretend that it's not a risky area because our model says it's okay. It's not going to happen. These are private companies. You can't force them to do anything. You can't force them to pay or you can't force them to charge a lower rate because your model shows one thing if their model shows another thing. This is not anything different than we see, well, since the beginning of time. Insurance industry people will tell you all day long they have to price for the risk. This bill is just taking one little piece of how that risk level is determined. It's a catastrophe model, and it's creating their own. It would be like me saying, well, I'm not a farmer, but I'm going to do my own research and decide what I think it costs to grow corn and what it should cost for the farmer so I can decide what I should tell the farmer they should be charging for their corn. What the heck does it matter what my think tank or my group or my university or my whoever decides? I'm not a farmer. I'm not selling corn. I can't turn around and force the farmer and say, hey, I think you might be charging the wrong price because based on what I've come up with, you should be charging a different price. Seriously, that's what this is about. I understand the thinking behind it. I understand what it's supposed to do. What I just do not understand is why we spend so much time and so much energy on trying to reverse engineer something to try and get to the answer we want. You know, that's what this is about. This is just about trying to be able to say, look, we think something else. And since you're now given the tools, the tool called catastrophe modeling, to utilize with your rates, we want to have that tool too, just so we have yet another reason to try and disagree with you. It's just pointless. It will accomplish zero, unfortunately, even though the data could be worthwhile. All right, let's move on. I got to stop. SB 495. This is the personal property advance. Okay. Now, you may have heard about this one. This is the no list issue. How does this work? Well, initially, the goal was if you had a total loss, you would not have to tell the insurance company what you lost. You would just get a check. You're paying the premium for it. You get the money that you were insured for. Period. End of story. But that's not how insurance works. You have to be able to either tell an insurance company, I have $100,000 in stuff, and here's what I have. And the insurance company will then decide, okay, I want to insure that $100,000 in stuff or not. But if you don't tell them up front what it is you have, then later there's a loss and then you want the $100,000 there, then they're going to say, well, you didn't show us before, so show us now. You can't get money for something you didn't have. Well, of course, there's legislation that changes that. And this just primes that pump. So what this does is in the event, there's a lot of caveats, so let's go through them. First, in the event of a total loss for a structure and in a declared state of emergency, okay, those two things have to happen, so we're narrowing the field down. 60% of the personal property limit on your policy must be paid out right away with a limit of $350,000. Now, here's the problem. Guess what? Existing law, the existing regulations are already saying you have to pay up to 30%. The Department of Insurance, after the wildfires, came out and said, pay more, even though you don't have to. And the carriers paid more, even though they didn't have to, because, again, that's the way our system works. And then, it just gets better. And then it goes from $250,000 in max to $350,000. Again, do you know how much money and time and effort was spent to get this bill passed? And we talked about this bill. I think the concept makes sense. The problem is, again, that you have to have it before or after. You have to either be able to show what you want to insure before you have a loss. And if you don't, if you want the insurance company to just take your word for it, then you have to show them what you have after the loss, one or the other. Now, the sponsor of this bill had made an interesting point to me, and it made sense that, you know what, after a loss, you're in a really bad place. It's not a level playing field anymore. You've just had a loss. You've got to try and work backwards. And that makes perfect sense. And that was, I think, the impetus for trying to get this actually done. The problem is, it doesn't address what happens before. Well, if it's an unlevel playing field after a loss, then it's a level playing field before. Do you want to be in a situation now where in order to buy personal property on your homeowner's policy, you have to show proof of what you have before you can insure it? Most people will say no, but that's going to probably happen to some extent somewhere down the line. Carriers are not going to be able to afford to just give blanket limits of personal property without any justification, and now not even be able to ask for that justification after a loss. So what I would expect you're going to see is this maximum of $350,000 in personal property that's due, part of the policy, or a basic limit, let's call it a default. And if you want more than that, you're going to have to show what you have. You're going to have to justify what you want to buy and not just pull the number out of the air and figure, well, I'll get this in the event of a loss. Let's talk a little bit more about it after the break. This is Insurance Hour. I'm Carl Sussman. Be right back.
Has this happened to you? You ask 3 different people about insurance and get 3 completely different answers. Your neighbor says one thing, your agent says another, and the internet? A total mess. No wonder so many Californians are confused about what their policies actually cover. That's why the Insurance Consumer Guidance Society exists. ICGS is a nonprofit independent resource created to help you cut through the noise and understand your insurance options with confidence. Their licensed experts don't work for insurance companies. They work for you. They'll walk you through premiums, exclusions, wildfire requirements, and more. Even help you make sense of those long renewal notices that feel designed to overwhelm you. So whether you're a homeowner, a renter, or caring for a property in a high-risk area, ICGS gives you the clarity you deserve. Visit icgs.org for free unbiased guidance. Please consider supporting ICGS with a donation. Your generosity keeps this service accessible to Californians who need it the most. ICGS, here for you.
Hello. This is Insurance Hour with me, your host, Carl Sussman. Thank you so much for being here today and learning all about insurance, our favorite topic. Remember, we could not be making this show without the support of ICGS. That is the Insurance Consumer Guidance Society. Find information at icgs.org. We would not be doing this show without their support, so you need to support them so they can support us. Please visit icgs.org. Before the break, we were talking about SB 495. This is that new guideline that's going to make insurance companies pay money without consumers having to show what it is that they lost. And again, I understand it. I understand the intention. I just want you to be aware of where it's going to probably go. And that is, you're going to end up paying more money or having to justify what it is you have before you purchase the policy versus after. Can't have it both ways. Let's move on to the next one, SB 547. This is the Commercial Wildfire Non-Renewal Moratorium. Why do they make these titles so complicated? This is a simple one. After a large-scale wildfire, the Department of Insurance typically comes out and says, okay, if you're in a wildfire area or you're in an adjacent area, you cannot have your policy non-renewed for X period of time. Well, this did not also help commercial policies. And guess what? SB 547, now it does. So now the Department of Insurance has that authority. They can turn around and say, not only can you cannot non-renew that homeowner's policy that just had a wildfire, you can't non-renew the small grocery store downtown or in the area of that as well. Pretty simple, pretty straightforward. I got no issues with it, which is kind of nice considering seems like I've had an issue with everything else. Speaking of issues, we are going to pivot on to the next group of laws. And oh, are you going to love these? Are you sitting down? Let's talk about the new California Fair Plan laws. That's what we need. Let's talk about it. This first one, AB 226, this is an urgency bill, meaning it is already in place. What does it mean? AB 226 is the iBank Bonding Authority. Why does everything have to start with I? Did Steve Jobs is that his forever legacy? Everybody wants to be I this, I that. Anyway, all right, what does it do? It gives the California Fair Plan access to instant cash based on bonds that it can issue. Okay? What does this mean in real life? It means in real life that if there is, or when the next major wildfire happens, and there's a situation where Fair Plan is cash poor, doesn't have the liquidity to immediately start paying claims, it can take out bonds, immediately have money accessible for it. It's a good thing. We're just kicking the can to some extent, right? Because at the end of the day, someone's going to have to pay for this. That's the theme. When these large fires happen, You can make as many hoops and as many shell companies and organizations, and you can run as many studies as you want. At the end of the day, somebody has to pay for these losses. So this is going to allow immediate liquidity. It's going to help people have money if they were insured with the FAIR plan, have access to getting their claim paid right away. Right away. Now, in case you're wondering what the heck is happening with FAIR Plan, because it does seem like they sort of do their own thing and don't follow the rules that every insurance company does, worry not, because we have AB 234, which allows a legislator to be added to the California FAIR Plan Governance Committee. Okay, so Assembly Speaker and Senate Rules Chair, or someone they designate, will now be added as a non-voting member of the California FAIR Plan Governing Committee, effective, I think that was early October. Well, this is a good thing. We'll probably get a little bit of insight as to the craziness that goes on behind closed doors at the FAIR Plan. What is this going to do? Well, it's a non-voting position, so they can't actually do something. But what these two new bodies in the room, they'll be in the place where it happened, are going to be able to have more information about what's going on. Hopefully, they will turn around, pass that on to the public, so we can help try and push for change. We could do an entire show, probably will, about the California FAIR Plan and things that it needs to change and update. Speaking of changes and updates to the FAIR Plan, yet another bill, AB 290. I love the title of this one. Customer Convenience and Grace. Oh, grace. What does this mean? Well, auto pay is going to come to the California FAIR Plan. They will have to accept automatic premium payments from consumers by April 1st, 2026. April 1st, 2026. Tell you what, I will tell you right now, I will make a personal donation to ICGS, our sponsor, the Insurance Consumer Guidance Society, of $10,000 if come April 1st, 2026, the California FAIR Plan is offering automatic premium payments. It ain't gonna happen. Why? Because nothing can happen that quickly. Their systems have been an absolute nightmare since they converted over to their, quote, new platform. There's no way this is going to happen. But I love the idea. Would be great. What is the grace part of this bill? Well, now there is a new 10-day grace period for installment plans on the California FAIR Plan. You know, basically like the rest of the world does for everything else. Do I think that will happen? Well, that'll probably take some time to implement as well because, again, systems. Let's move on. I can't talk about FAIR Plan anymore. SB 525, manufactured and mobile homes. This allows the California FAIR Plan, weren't we done with that, to offer insurance to mobile homes and manufactured homes. This was kind of already there, but now it's actually on the books, right? So there you have it. The next one we have, let's pivot to auto insurance. Dun, dun, dun. AB 435. Are you ready? This is the 5-step seat belt test for older kids. So now, based on size, not just age, starting January 1st, 2027, apparently we don't care about kids until then, kids between age 8 and 16 must meet a 5-step seat belt fit test to be considered properly restrained. So it's not just their birthday, it's not just their age, it has to do with what is actually a safe way for them to be seated. This puts more pressure on people to have kids in boosters for longer. There could be 8, 12-year-olds, who knows, that still need booster seats, whereas previously they wouldn't have had to. Again, it's always sad when you have to legislate people taking care of their kids, but there you have it. We're doing it. I just wish it wasn't going to take this long to go into effect, but that's just me. All right, we're going to take our final break. When we come back, we're going to cover the last few bills that I wanted to cover today. And then you will leave today infinitely more educated on all the new insurance-related laws. This is Insurance Hour. I am Carl Sussman, your host, sponsored by the Insurance Consumer Guidance Society. 60 seconds break. We are right back with the final segment of the show. Stand by.
Have you ever opened a letter from your insurance company and felt your stomach drop? A canceled policy, a sudden premium spike, A long list of terms no one speaks in real life. Most Californians don't realize how fast their insurance situation can change until it already has. That's where the Insurance Consumer Guidance Society steps in. ICGS is an independent, nonprofit organization that helps you understand what's really going on with your coverage before it becomes a crisis. No sales tactics, no company agenda, just licensed experts who explain your options in plain English. From homeowners and renters insurance to wildfire zones, hazard requirements, and everything in between. So the next time a letter arrives and you feel that jolt of panic, you don't have to face it alone. Visit icgs.org to get clear, reliable guidance you can trust. And because ICGS is a nonprofit, your donation helps keep this vital service free for Californians who need it the most. ICGS, always by your side.
Hello. This is Insurance Hour with me, your host, Carl Sussman. Thank you so much for being here today. Remember, the show would not be possible without the support of ICGS, the Insurance Consumer Guidance Society. Please support them. They support us. They keep us live. They keep us going. ICGS.org. They are there to help you understand insurance, which is hopefully what I'm doing. Listen, before I forget, I do the best I can to give you the most up-to-date and accurate information that I can. But I'm only human, and I may make a mistake now and then. If you hear something that seems wrong, don't be shy. You're not shy. Let me know. Visit us online at insurancehour.com. Give us a call at 559-656-0317 and say, hey, I think what you said about blah, blah, blah was wrong. If I'm wrong, believe me, I want to turn around and get the correct information out to people. My goal is to support the accurate data, not to support what I believe to be the case. So don't be shy. If you hear something that doesn't seem right, let me know. I do the best that I can. In that same tone, let's move on to the last few bills I wanted to cover today. AB 815, it's the personal vehicle used for public social services. This basically says, all right, it's going to protect volunteers and social service drivers from having to have commercial insurance for their car, which is fair. What does this mean? Well, probably means that there's going to be an endorsement or a change to personal auto insurance that's going to allow consumers to pay a few extra bucks on their personal auto insurance that extends even though they're doing things that would be technically considered a commercial risk and belong on a commercial policy. All right. Speaking of which, talking about commercial exposures in cars, SB 371 is the new ride share limit bill. This one is mind-blowing to me. What this does is for Uber and Lyft type rides, the uninsured and underinsured motorist limit that was required before of $1 million has now been lowered to $60,000 per person, $300,000 per incident, period, mic drop. Why? Why did we do this? Well, this is going to be putting the rideshare company more on the hook technically than the individual driver. What does this mean in practice? It means that Uber drivers will be able to carry less insurance, and unfortunately that will typically mean that consumers injured in those vehicles are going to have a harder time collecting money. I would suspect, although I don't know, that this was heavily pushed by the rideshare industry to try and make it easier for their drivers, which, okay, I get it. Still not thrilled about it. I like to see people having more coverage and protection rather than less. But again, I get it. And that is the law. All right, next up, we are going to pivot to workers' comp, SB 291. I love this. This is going to create more penalties for contractors that are not carrying state mandated workers' comp policies. So there will be civil penalties and new enforcement tools against contractors who employ workers without the required workers' comp policy. Okay, that's good. You're going to force people to follow the law that already exists. I like it. They're calling it something that's going to level the playing field. So the quote unquote legit contractors that are doing the right thing are going to be competing with the guys that might not have been carrying workers' comp, so they couldn't compete. Not fair. It's going to give more penalties to the people that don't play by the rules, which I like. Seems fair, right? Finally, SB 847. This is the presumption to unwind asset transferred by uninsured employers. Whew. This is another one. This is something that's going to make it harder for people and companies to hide assets with certain real-time property transfers by uninsured employers to evade workers' comp liens. So here we are. We're going to help enforce existing laws by passing more laws. This is supposed to make it more difficult for certain employers that are trying to get out of paying money that they owe by being able to look back a little further, dig a little deeper. I'm not an expert in this field, so I won't go further into it. Suffice it to say that this is designed specifically to try and get people to pay the money that they have due. Close some loopholes. How about that? And with that, that will complete the list of bills and laws that I wanted to talk about. Now, remember, there were 800 new laws that were passed. We just went through a handful of them. Now, these were the laws that I identified as being significant, as being the ones that impact our insurance world and that you need to know about. But there are others. There will be others. There is a lot going on in the insurance industry. We are far from at equilibrium, but I can say, finally, we are heading in the right direction. I know it might not feel like it right now because rates are going up, but let me tell you, being on the inside and the outside and the middle, I can tell you that the industry is finally starting to be able to function again and compete. We are finally entering an environment where competition is doing its thing. We are going to see rates start, are you ready for it? Going down with competition. But we're still not quite there. We're still playing catch up, but we are getting there. So again, if you have questions, remember you can always reach out to me at 559-656-0317, or you can send your questions to questions@insurancehour.com. Please be sure to support our sponsor, the Insurance Consumer Guidance Society, ICGS.org. They need sponsors. We are trying to get ready for next year. We want to be sure that we've got the moolah ready to go. So please visit, sponsor. It helps us keep this show alive. And speaking of alive, I am still, and you are too. So have a safe day, week, weekend, month, year, whatever it is. This is Insurance Hour, and I'm Carl Sussman. Thanks for listening. I do want to thank all of you for taking the time to listen today. I know insurance is not necessarily the most sexy concept. It is important that you understand what it is you're looking for, what it is you think you're getting, and finally, what you actually did purchase. You simply need to know more than you used to. Things are more complicated. If you have any questions, please reach out to me directly at 559-656-0317. You may also send your questions to questions@insurancehour.com. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. The show is dedicated to Shamrock Papa.